My belief is that because of the size of the on-balance sheet and off-balance sheet liabilities of the U.S. government, relative to the size of the U.S. economy, that the purchasing power of the U.S. dollar will decline by 75% over 10 years. If that's true, and I believe it is, I'd love to see somebody challenge my arithmetic, it is likely, as far as I'm concerned, that the nominal price of gold reflects the deterioration of the purchasing power of the U.S. dollar. That would suggest over 10 years a threefold increase in the price of gold.
Gold's run in 2025 shocked even the veteran metals community. As inflation ran hotter than official numbers admitted and U.S. debt issuance exploded past historic norms, gold punched through level after level, becoming the best-performing major asset class of the year. But the story didn't end there, because according to legendary investor Rick Rule, 2025 was merely the warm-up. His math suggests something few analysts are willing to say publicly. If the dollar continues eroding at its current pace, gold isn't just going higher, it may be on track to triple, and that's the foundation of today's discussion. Rule argues that the purchasing power of the US dollar is deteriorating so rapidly that gold doesn't need hype, central bank headlines, or speculative flows to rise. It only needs Washington to keep behaving exactly as it has for the past decade, and that's precisely what we're seeing. Sovereign debt is ballooning, the interest burden is spiraling, and political dysfunction has made even basic fiscal restraint impossible. If the currency loses 75% of its real value, Rule says the math for gold's explosive upside becomes not just plausible, but mathematically unavoidable. But there's another layer to this story. Gerald Celente, the forecaster who has nailed major economic cycles for over 40 years, warns that while gold is set to soar, an entirely different bubble is nearing its breaking point: the AI mania. He argues that capital is being mispriced, innovation is being romanticized, and Washington is focused more on geopolitical theater than on national stability, all while China quietly advances its AI infrastructure at breathtaking speed. When bubbles burst, money seeks safety, and Celente believes that shift could accelerate gold's moonshot even further. Together, Rick Rule's arithmetic and Gerald Celente's geopolitical lens point to one conclusion. Gold is not just a hedge anymore, it's shaping up to be the single greatest opportunity of the next economic cycle. Before we hear Rick Rule break down the math behind why gold may be entering its most powerful decade yet, please take a little time to subscribe to the channel, drop a like, and comment down below where you believe gold is heading next. We appreciate the support and hope you enjoy the video.
What do you make of the government shutdowns, and how do you think it is impacting what we're doing?
It's theater. I think it shows people around the world that government's function is not to serve. It's rather to rule. You are seeing theater in support of political posturing of party elites to the body politic. It's disgusting. First of all, the government isn't shut down. They're shutting down some services. Some people aren't getting paid, but prior shutdowns have shown that they will get paid. So what this really is political posturing. If we actually had a government shutdown, that would be progress. If we actually had a government shutdown, that would be real progress. That will never occur. It doesn't serve the interest of any of the political class.
Do you see it merging into a Doge 2.0 scenario, maybe using it, and I think one of the media outlets used the term cull the herd?
We never had Doge.
Yeah.
We never did. Doge was also theater. It was well pointed out by David Stockman that there was never an intention to reduce the size of government. There was an intention to change who the beneficiaries were. The Department of Government Efficiency gave way to the Big Beautiful Bill, which prophesied the second largest deficit in recorded history. So Doge 2.0 assumes that a Doge 1.0 existed. It's important to note that this is all theater. It was never meant to occur. It was always intended to mislead. And in that, they were extremely successful.
What is the underlying agenda then? Like, what's maybe even the end goal?
Power, naked power. The ability to benefit those constituents who are close to you at the expense of others. H.L. Mencken famously said, elections are everywhere and always advanced auctions of stolen property. If you think about an election in that fashion, you'll understand them. A saying that goes further back, I think it was Gore Vidal, that said you can understand the political process if you look at the origin of the word. Politic, poly from the Greek for many, tick from the English colloquial for small blood-sucking insect. If you believe that the role of government is somehow to do good, you will continue to be hoodwinked and swindled. If you understand them for what they are, small blood-sucking insects, if you understand the elections for what they are, advanced auctions of stolen property, sadly to say, if you become sufficiently cynical, you will understand the role of government. People pay more attention to liquidity than they do solvency because people hate arithmetic. If you look at the S&P 500 in the period 2000 to 2025, and your denominator is gold rather than the dollar, the S&P 500 has been in a bear market for 25 years. If your denominator is fraudulent, then you see us in a bull market. I mean, this is really pretty simple arithmetic.
It is.
I have, as an example, I've maintained liquidity in US dollars, but I've saved in gold for 25 years. And when I look at the part of my ledger that's constructed in gold, I'm struck by how cheap things are. Energy's cheap, food is cheap, housing's cheap. What I use as my denominator, the US dollar, things are expensive.
Yeah. It seems like QE is back on the horizon, or it's at least not being called that.
Well, you will see that they added 26 billion to the system last week. So when somebody says, when is quantitative easing going to happen? I say, last week.
Yeah, it's already, we're in the middle of it.
Yeah, we're in it.
Because wasn't it like we're moving quantitative tightening? We're letting some of those mature, like mortgage bonds, like mature, but we use that money to reinvest and buy short-term bills?
And that's very interesting. I mean, that to me is the crux of maybe what we talk about for a little while. The Fed is actively participating in the short end of the curve. Since 1992, when they've participated in the short end of the curve, they've been able to bring the long end down. People have played the time spreads. What's happening now is that despite their efforts, the long end is going up. That would suggest, it doesn't prove, but it would suggest that for the first time since the Clinton administration, the market is beginning to reassert control over the long end of the curve. And that must scare the hell out of the Fed.
What do you make of the Dixie, the dollar meeting? Why is that? Why is it rising?
I'm not sure. I really not. I think that the next 10 years sees a period of multi-currency volatility. I don't think that the US dollar does poorly relative to other currencies. I think the purchasing power of the US dollar in an absolute sense is going to be disastrous. I mean, I think that we re-enter what we saw in the 70s, where according to the US government, the US dollar loses 75% of its purchasing power. I don't think the US dollar does badly against the euro, or the Canadian dollar, or the Australian dollar, or the British pound. I think it is absolutely as opposed to relatively bad, but I think that we're coming into a period very similar to the period 2000 to 2006, where there's multi-currency turbulence, multi-currency variability. Right now, we're seeing a period where although the US dollar is absolutely weak, it's relatively strong. I'm not sure why.
Yeah.
I suspect it isn't because of the strength of US so much as the weakness of our counterparties.
Like I read somewhere, maybe to interject here, is that the US keeping the yields high, so money is floating into the US because the yields are just higher than in Europe, for example.
And that makes perfect sense.
Just very.
When I think about our challenges, when I think about them in an absolute sense, I'm afraid. When I think about our challenges relative to European challenges, I'm more afraid for the Europeans than for us. I think that the United States already has the remnant of tech supremacy. If you look at the 10 largest tech companies by market cap in the world, they're American, which means that the government maybe has decided, or maybe accidentally, that we're playing to our own existing strength. All the United States would have to do, all that we would have to do, to reassert financial hegemony on a global basis would be to control the budget deficit. We don't need to reduce spending. Reagan never did. He controlled spending. He allowed the economy to outgrow the deficit. And we need to reform our tax code. If you and I built a factory in the United States, tilt-up concrete construction, we would amortize the construction cost of that factory over 33 years. In other words, we would deduct 3% a year from our tax base. In Sweden, socialist Sweden, we would expense that factory. In Japan, we would expense that factory. In China, we would expense that factory. The United States has adopted a populist, consumer-centric tax code, because that's what the voters wanted, in favor of the investment-centric tax code that the Asian tigers, plus Sweden, plus Latvia, Lithuania, Estonia, have instituted. That system works, ours doesn't.
Rule's argument is brutally simple. Gold isn't rising because of speculation. It's rising because the currency backing the global financial system is eroding from the inside out. When purchasing power collapses, prices don't go up. The currency goes down. And if the dollar continues losing real value at the rate it did in 2025, gold simply rebalances to reflect that decay. His projection of a potential tripling isn't a moonshot prediction. It's arithmetic rooted in decades of historical precedent. What makes this moment different is that Washington seems completely unwilling or unable to address the structural issues driving the decline. Instead, fiscal chaos, debt expansion, and political theatrics dominate policy decisions. And that's where Celente's analysis becomes essential. When governments lose control of their own narratives, markets reprice violently.
AI was born to the public in 2022. It's an infant. You don't invest all your money in the infancy of the new development, whether it be high tech or heavy industry. And that's what they've done. They've overinvested in these companies. They're not making money. Again, going back to Slick Willie, again, you make connections between different fields. China came into the World Trade Organization 2 weeks after 9/11, 2001. In 2000, and you look at China's GDP before they came into the World Trade Organization from 1970 to 2000, it's like this. They get into it and poof, shoots up. In 2000, again, this has everything to do with AI and the dot-com bust. Some 10% of Chinese 18-year-olds went to college. You know what it is today? Almost 70%. This is China. It's a country of 1.4 billion people. What do we have? About 340 million here? Mm-hmm. They got over 1 billion more people. Young people who are all going to college.
And they're not just going to college, Gerald. They're also majoring in STEM degrees. They're not, doing women's studies or underwater basket weaving majors and things like that. I mean, they're actually going out and learning engineering, computer science, that kind of stuff.
You got it. And these are very intelligent people. And again, it's in your magazine. No one is talking about it. China, Beijing is investing very heavily in the AI market. Go back to, again, when we made the forecast in January, DeepSeek. No, Chinese company, AI. No, it didn't cost us $100 million to do this. It only cost us $6 million. And we don't need these big chips. And now China's developing. So AI, again, like it, hate it, want it, don't want it, ain't the issue. It's the future. It's the future. And goes back to the dot-com bust. China's going to lead the world in it. And all these companies have overinvested in it. And all the loans they've taken out, all the fake money that they put behind it. And I'll tell you another thing that nobody's talking about that's going to bring down the markets is office building bust. Google up Castle Systems, Kastla. Anyway, it's around
I'll look it up.
5%. Your office vacancy rate, meaning nobody in there, it's around 20% vacant. It was 11% before the COVID war. There's going to be huge failures on office buildings. That's going to bring down the banks. Let's go back to 2023, not ancient history, only 2 years ago. Signature, First Republic, and Silicon Conman Valley Bank. 3 banks went bust. Poof, down goes the markets. Poof, gold prices spike. 3 banks. You're going to see 30, 40, 50 banks start failing. Again, we got to go. Trends are born, they grow, they mature, reach old age, and die. COVID was 5 years ago, the war. Now the leases are coming up and they're not taking all this space back because a lot of people are still working at home and they're only coming back maybe 3 days a week. They don't need all this office space. There's going to be an office building bust that's going to bring down the banks. No one's talking about it. Go back to the Trends Journal, top trends for 2024. Golden year for gold. Gold went up, 27, 30%. And then we said, when Trump got into office, gold prices are going to keep spiking. Go back to October 16th. You could look it up. Go to our YouTube, Gerald Celente, or Trends Journal. And I said that gold would go down about $500 an ounce. because it really spiked up. And nothing goes straight up or straight down. You have to have a correction. The next day, gold hit $4,379 an ounce. That was the top. The next week, boom, goes way down. $500 it ended up going down. Last Thursday on our podcast, I said gold has to solidify above $4,000 an ounce. Once it finds a solid base over $4,000 an ounce, it's going to keep going back up. And as we went on the air, it was at 4,194. It hit 4,245, and it backed down from it. So it stays above 4,000, 4,700, 4,070, 4,100. It's going to keep going up. Same with silver. Again, you nailed it. You made it very clear. It's the geopolitical and socioeconomic uncertainties that are going on. And they're going to keep ramping up these wars.
Celente warns that while gold is grounded in fundamentals, the AI boom powering U.S. markets is floating on narrative. The race for AI supremacy has triggered reckless spending, misallocated capital, and valuations completely disconnected from productivity. And unlike previous bubbles, this one is unfolding against a backdrop of geopolitical fragmentation and weakening U.S. global influence. He sees the AI sector not as the future driver of the economy, but as the next major pressure point, one that will collide with debt dysfunction and trigger a broader flight to hard assets. If that bubble unwinds, the effect on gold could be instant. Trillions in overvalued equity capital would look for safer ground, and historically, that ground has always been the same: precious metals, especially when sovereign risk is rising, political coherence is fading, and national strategy is being replaced by short-term political theater. Celente's worry isn't whether AI collapses, but what happens when it does, and the US is unprepared. Combine Rule's purchasing power math with Celente's geopolitical warning, and the trajectory for gold becomes clear. Not because investors are irrationally bullish, but because global conditions are rationally deteriorating. In their combined view, the next major economic cycle will be defined by two forces: the bursting of an overhyped technological bubble and the resurgence of the oldest financial insurance the world has ever known. Gold is no longer a contrarian trade. It is rapidly becoming the anchor of a global reset. Whether it triples or merely doubles, the direction is unmistakable, and the window to position early is closing faster than most realize. If you found this breakdown valuable, hit like, subscribe, and turn on notifications so you don't miss the next deep dive into the global metals market. And tell me in the comments, are Rick Rule and Gerald Celente right about gold's next leg higher? Thanks for watching, and see you in the next one.